Let's stick with the markets now. I'm bringing David Nelson of Belpointe. He is the chief strategist there. David, always good to see you. I want to talk about a forgotten asset class, as you put it in your note, and that is the small cap stocks, really shining here rather quietly throughout the latter part of 2020. Do you see that kind of momentum heading into 2021?
I definitely see it in 2021. If you think about it, Alexis, growth is the most expensive when there isn't any. And suddenly there's a whole, number of sectors and stocks that are going to start to do well. And everybody's been like hiding in FANG, and that's been the large cap secular growth trade. But FANG is not the risk on trade right now. Right now, I'm looking at earnings for next year in the S&P 500 up about 21%. If you look at small caps, it's going to be up over 60%. And they've been quietly outperforming since the bottom of this market. It's actually a pretty big outperformance.
What are your clients telling you right now between now and the end of the year? Are they going to take some of those nice profits they were able to garner throughout the year, and where are they looking to put their money in January?
I think more than likely, some of them will look to pull the trigger after the first of the year to avoid the capital gains hit. I would expect that, and I think you'll see some volatility in a lot of these stocks that have made such meteoric moves today.
Speaking of which, Airbnb, DoorDash, both having spectacular IPOs, though DoorDash is pulling back a little bit right now. What do you make of these IPOs, and do you like either one of those companies' long-term prospects?
I don't own any of them right now. They don't fall under my model at this point. And I don't think we should be really surprised. We have to remember, Alexis, this is a liquidity event. And with markets close to all-time highs, if you're a CEO or an early founder, you want to monetize some of those shares. And for Airbnb, they certainly don't want to miss their window again. They missed it earlier in the year. COVID came along and they saw their private market valuation plummet. Now that it's back, they want to cash in some of those chips. What disturbs me more is the fact that so many of these companies are using dual class structures, and essentially it gives super voting shares to the founders of the company and essentially lets them control the company for life. Even if they sell a bulk of their shares. Unfortunately, it's been going on for some time. I don't expect it to stop, but it's a big red flag for me.
All right. So, what do you like right now heading into the new year? What do you see as maybe some hidden gems in this market that we should be paying attention to?
Well, I can tell you my biggest overweight is still industrials. They're essential businesses. And as we get more cyclical and as the world goes back to work and factories go back to work, you have to look at the industrial sector. So I own a whole bevy of them. One concentration that I have that is out of favor, and that's defense stocks. And it's likely because we're getting a new administration. But the last time I looked, Alexis, every corner of the planet is still a geopolitical hotspot. And I think China is likely to test Biden early in his administration. It could come from foreign policy, certainly economically, and perhaps even militarily, especially with what we're seeing in and around Taiwan.
I want to stay international for a moment. We know the stimulus talks have hit roadblocks here in the U.S., but also look what's happening over in Brexit. It now looks like the prime minister in the EU saying it looks like there will be no deal by Sunday. Brexit could happen with no trade deal in place. So do you even touch the UK market right now? And do other European markets look a little bit more attractive?
We've been dealing with this. It's hard to believe that we're still talking about this 4 years later. As a matter of fact, I was on Yahoo 4 years ago talking about it as it happened. It's about 900 billion in trade that's put at risk. And it looks likely that this, if it's going to happen at all, that it's going to happen without a deal, as Christine Lagarde said yesterday in her conference. My guess is somewhere between now and the end of the year, they're going to find some way to punt this a little bit further, which is what they've been doing for the last 4 years.
All right, what about here? Stimulus can't seem to get it done. If we don't get a deal by Christmas, what happens to the stock market, David?
Hard to say. Look, partisan politics are gumming it up again. Just about every economist on the planet, including Fed Chair Powell, have said that we need a stimulus package to get to the other side of a vaccine rollout. Yesterday's 853,000 in claims, that's a break in trend, Alexis, and that's the highest level since September. So I'm hoping that gets them, off their ass. But right now in Washington, it's snafu, situation normal, all fouled up.
Yeah. I like the straight shooting kind of talk there. David Nelson of Belpointe Asset Management. Thank you.
Thank you. Have a great
Hopefully
weekend.
they're listening.